I think we're live, Ben.
I think you're right. Let's see.
I shared my screen, but no one can see it.
What's that?
I said I shared my screen, but I don't think anyone can see it at the moment.
Oh, I see. Well, it went away. Hit it again.
Okay.
Can everybody hear us okay? Good morning. Thank you.
Good morning, Vietnam.
See, add to stream. And then I can go like that.
Ah, that's beautiful.
There you go.
That is beautiful. Then we can go on and off. How's everybody doing this morning? This beautiful, beautiful Friday morning. Ben and I are going golfing today. It's going to be wonderful. It's going to be hot.
I was going to say, you need to start hydrating right now.
I'm drinking coffee. Does that count?
A little bit.
Yeah. So, yeah, it's pretty hot here in Arkansas. It's probably going to be around 100 this afternoon. Don't usually golf in this kind of heat, but we're going late afternoon. Got to get out of the house every now and then.
That's
so,
right.
Hey, Jim, how's it going, man? We'll kind of give everybody a couple minutes to get going, kind of come in, and we'll get started. Start with our analysis of the market, and then we'll kind of go from there.
Look over some of the ETFs we were on last week. Did anybody jump on UNG?
UNG was the winner. Winner, chicken dinner.
Was definitely the winner.
Yep. I think probably what I'll do, Ben, is I'll start with the overall market, a quick market analysis. Then we'll go over last week's buy recommendations, and then we'll kind of go back through the top of the list. If we have time at the end, maybe we'll take some tickers for some people. Just kind of see how everything goes. Last week was really our first time to do it in this live stream setting. Done hundreds of webinars, but this is kind of the new software. So
still a work in progress. Thanks for your patience.
Yep, still a work in progress, but we will get there. You know, this is for your education and entertainment. Give just a few more seconds. Where is everybody watching from? I see John's from Oregon. That's great. As most of you know, if you've been on the show, Ben and I are in Russellville, Arkansas. Small working class town. There's not a whole lot here, but it is home. All right, we love it. Or at least I do.
I enjoy it for what it is. It's a good place to raise a family.
It is a great place to raise a family. Thought I wanted to be a big town boy, and then when I got there, I was like, I could do without this.
80 east of Dallas. Go Cowboys.
I'm an Eagles fan.
South Carolina.
Montreal.
Ooh.
North of the border. I like it. All right. We good to get started, Ben?
Yeah, I put out this last minute, joining live a little bit late today. I put it up 5 minutes ago, so there might be some people trickle in. But in fairness of the start time, let's rock and roll.
Let's rock and roll,
Kevin.
And disclosure, I do have, some cabinet guys that are still in my house. You might hear them, you might not. I told them to keep working because if my wife comes home to finish cabinets, she's going to be happy.
It's going to be a good weekend.
It's going to be a great weekend. And I'd like to start it off a great weekend. So let's just, let's just all bear with it. Okay. So it's been an interesting week. I'm going to start here with the NASDAQ because I usually follow growth stocks, right? I'm going to start here with the NASDAQ. It's been an interesting week. Obviously, there's a lot of headline news. I think anybody who's watching the news can see that. A lot of news coming out of Afghanistan. Last week you had the Fed talking about tapering their asset purchase program. But I think it's very important right now to really identify that the market just continues to shrug off this news. Yesterday the market was, in my opinion, given what happened in Afghanistan, barely down, right? Even though there were some stocks that got rocked, but last week we had a slight pullback. The market they found support at the S&P 5 or at the 50-day moving average. This orange line, it continues to find support at, briefly broke it, and then came right back and notched new highs. So I think when we were watching last Friday on 820, the bar was right here. This just looked like a bounce. And you're in a bull market because every time the market just continues to, it looks ugly for a couple weeks or even a month, pulls back a little bit, goes sideways, and then it just keeps coming back, right? So I think right now the one advice I could give you is to try to stay invested as long as you follow your rules. Stay invested as much as you can, right? That doesn't mean stop using stop losses. You still got to use stop losses and proper risk management. But there is a wall of worry going on the TV right now, and the market just keeps climbing it, right? So it's just incredibly important that we're in a bull market. We're in a strong market. When is this going to end? How long is it going to go? We have no idea. We're not predictors. We're just analyzing the chart, what's in front of us. So I'm just here to follow the trend, right? And right now the trend is up. So we're just going to continue to follow the trend until probably something like last week's low gets broken, right? And then we're going to have a deeper pullback or even a correction. So far, that hasn't happened. So, and what continues to be interesting to me is, even with all the negative news about, the Fed, all the negative news about the Delta variant, the COVID numbers are hitting all-time highs, right? Afghanistan, we are still less than a quarter of a point from an all-time high. So that should give you extra confirmation of why you need to ignore the news and just focus on the chart, because the market just keeps going higher. Let's look at the S&P 500. The chart really doesn't look that much different. It actually looks probably a little bit stronger. The S&P 500 is more diversified, has more banks, has more energy, more value-oriented, where the NASDAQ is more growth-oriented, like tech stocks, biotech, stuff like that. But this is a really good-looking chart. I mean, if you look at it, you think if you just ignore the fact that this is the S&P 500 and think that this is an individual stock, right? That's pretty much a nice 45-degree angle all the way going back to last fall. Sure, we had some scary times. And when the market is going down, 2% back-to-back days, or is absolutely getting crushed, I understand that it's quick to get defense. It's easy to get defensive. It's easy to just want to sell everything and say, oh, this is the big one. Every time it's just get proven wrong, right? The market just settles down and continues up here. So again, sometime there will be a time where the market pulls back deeper, right? Where the market corrects more than 10%. That's completely normal. That's actually completely healthy. But for now, we're in an uptrend. We have to treat the market like, it isn't an uptrend, and just stay bullish as long as we can. All right. So it's important to follow the rules on the individual stocks. Sometimes the market will pull back, but your stocks are hanging in there. So if you have a stock and you say you have a stop loss, follow the rules of that stock. Don't just sell everything just because the market pulls back. One other major index that I wanted to talk about before I move into the top ETFs of the week is the dollar. And I think this is incredibly important because it's looking like it wants to really make a run a little bit. So you have the dollar. Let's go to the weekly chart for a second. This is the UUP. This is the dollar ETF that has really been in a downtrend, right? The weak dollar since March of last year. And now, so you have the death cross. That means the 10-week went under the 40-week. The orange line went under the black line. So you have a bear market, so to speak, in the dollar. Now it's starting to bottom. And now you have the orange line back above the black line, which is the golden cross. And it looks like it wants to kind of round up and head out of here, which the dollar and commodities have an inverse relationship. So, and especially more so with metals, right? So that means that if usually the dollar's going up, gold, silver, they're usually going to go the opposite direction. But I think this is important to notice. I'm going to go back to the daily chart that you do have that cross right here. And so now it's consolidating. So in my opinion, this is still in a bottoming pattern, but we all need to be open to the dollar getting stronger, because it's looking like it's pretty close to trying to break out of this bottoming pattern and go the other way. Since for a year and a half, we've had the dollar really going down and getting weaker. So just kind of something to keep an eye on. So let's talk about last week. Last week there were a few ETFs that were looking really strong. I said, hey, these ETFs are in buy range right now. There were a few that were on the watch list. The ones on the watch list haven't quite done anything. They haven't pulled back into what I think is the buy range. But let's start with UNG, because look how strong UNG has gotten. So last Friday, we were right here on this kind of red day right here. I talked about UNG. It made a major move, and then it really made its first test of the 50-day moving average. Usually, whether it's a moving average or another support zone, usually the first test of support has the highest likelihood to succeed. So I said, hey, this looks good right here. Let's go ahead and, if you're looking for a potential trade setup, I'd recommend this one. And man, this one did good. It's up 13.5% this week alone, which is pretty not easy to do for an ETF, because ETFs usually just don't move as much as stocks. Right? I think the overall market might be flat in the last week just due to yesterday's sell-off. But you had the UNG that looks really good and is now looking even stronger. So anyone who decided to take action on this last week or even on Monday was definitely rewarded. Now, it's sometimes, I follow a simple money management rules on everything. I try to treat all trades the same, and I usually book partial profits. I usually sell half at 8%, right? Then raise stop to break even and let the rest run until it breaks the 50-day moving average. So if you did take action, as I know some of you did, some of you emailed me, awesome trade. Might not be a bad idea to sell, just book a little bit into this gap and then raise your stop to break even on your remaining shares and let the rest run until it breaks this orange line, right? Give it an opportunity for profit maximization. This is really our automated profit booking strategy. Sell half at 8%, let the rest run until it breaks the 50-day moving average. So this one was a huge win. It's looking really good, and it actually looks like it wants to continue to run a little bit. If you're watching this and you're like, should I get in now? I would say the answer is no, right? You want to buy as it's close to support, not after it's already extended, right? This has already made a monster move. It'll likely pull back. Some of the greatest opportunities out there, they do give us multiple opportunities. So UNG, awesome win. That's good. So another one was Block, BLOK. So if I go to the weekly chart, you can see Block is up 2.5% this week. So again, this one was the other one we talked about, slightly better than the overall market, up a little bit, right? This one still looks pretty good, right? This one's kind of setting up, but it still is in a consolidation. But I would say that if Block, so we're up on this one too, if Block breaks above 51.53, right? If it breaks out, then I think it's really going to make a run up to 60. Okay, because once it starts to kind of break these pivots down here, right, kind of breaks out of them, then it's going after 54, then it's going after 60, right? That's just the progression that they usually go in. So Block up slightly beating the market for the week. That's also great. Our only other one we said was looking really good was GBTC. This one is, I'll go to the weekly chart. This one is slightly down 4% for the week. Okay. If this one, I believe last Friday was right here, and it did pop on Monday. It looked pretty good. Like it popped on Monday, was looking like it's going to break out, and then it pulled back to the 200-day moving average, which I think is support right there. So I do think this will find support and then kind of pop out of here. So you have one that's up a lot, one that's up a little, and then one that's down a little. I would say that is a huge success right there, especially UNG. And sometimes you never know which one's going to be the winner, right? You just don't. So that's why I always say, like, treat all trades the same, put the same amount in every trade, have the same money management rules, and let your rules, let the stocks or the ETFs prove themselves to you. So far, I think last week we did actually pretty dang good so far. Let's go into the top ETFs of the week. Let me go to the list and let's look at, let's kind of rank these. As you can see, what's interesting, last week, UNG is actually the top one of the week. Okay. This one's up, 13% on the week. It's gapping up huge. We already covered this. This one's extended. Let's go down the list. IEZ, this is still in a downtrend. So even though a lot of the energy popped this week, and I think that has a lot to do with, people are worried about supply chain issues in the Middle East due to everything that's going on in Afghanistan. So it did pop a little bit this week. In my opinion, this is still not a great trade because it's still in a downtrend. So it is still in the downtrend channel. When I look at something, it's in a downtrend channel, even though it had a good week, I say, okay, it needs to make a move above a long-term moving average, kind of pull back and then re-break, right? Something like this. I'm looking for that, the break of that, right? Because it has to break out of this downtrend channel, because every time you can't buy something is in a downtrend, you can't buy it every time it has good weeks, because you're going to have a lot of false breakouts, right? You're going to have, it's just going to keep rolling over. Like I've said in the past, strength follows strength, weakness follows weakness. So if we're in an uptrend in the major indices, which we are, we have to assume that's going to continue. If we're in a downtrend in an asset, we have to assume it's going to continue until the trend reverses. So you have a lot of energy in here, FCG. So these are the nat gas stocks. It did bounce off the 200-day moving average. Here's something that I'm a little bit concerned about is usually I want the stocks that track the commodities to beat the commodity itself. And so far that is not happening. You have FCG is up a lot this week, but UNG is up a lot more. I'm usually going to look to go for the strongest one. So with this one, it is breaking out of a downtrend. It did bounce off long-term support. I don't know if I would label a buy rating on this. I'd probably want to let me clear this. I probably want to let it pop a little bit more, pull back, test the downtrend line, right? And then do a re-break. Okay, because again, this isn't a downtrend, even though it did find support, but we're looking for a true trend reversal. A lot of energy. USO popped this week. I could make the bullish case. I could say this is a double bottom. Looks good. I probably want it to do a little bit more action, maybe break out of that downtrend, because I want there to be a little bit more confirmation just to make sure that this is not just a overreaction based on what's going on in the Middle East, because that could easily settle down and then just absolutely roll over. The Chinese stocks, the Crane shares, KWEB really had a good week. It had just one major day. Let's look at this for a second. It had one major day, and I think that was on Tuesday, where an ETF popped 11% in one day. That's pretty something. I mean, that's a lot for an ETF. I think there was a report that came out that said a lot of hedge fund managers are now buying these stocks because, they're down 50%, more than 50%. That's an ugly downtrend. But again, it is a ugly downtrend. I need to see something more than just a 1 week pop, because I'm just assuming that this downtrend is going to continue, because you have the death cross right here. That looks pretty ugly. And you can see there were a lot of kind of mini rallies that just absolutely rolled over, and it's getting ugly. Is there a long-term opportunity right here? Maybe, but we're talking about a little bit more short-term swing trade. So a lot of more of the same right here. But one thing, when I look for ETFs, a lot of the ETFs will just move with the overall market, right? They're just going to move with the overall market. So I'm thinking, okay, if I'm going to trade ETFs, which I do, but I want ETFs that are more aggressive. I want ETFs that can 100% really, really pop and make a big move. So I'm looking at some ETFs that really, really made a big move this week, and I can't help but to look at this buck that is in the top 10. Look at this monster move right here, and this is in the cybersecurity industry. A lot of the cybersecurity stocks really, really popped this week. And you can go to Palo Alto, you can go to a lot of these individual companies, and you can see that they gapped way up. There was news that came out of Washington that Google and Microsoft met with the White House, and they were talking about massive investments in cybersecurity due to all the breaches that's going on everywhere. I think you're going to have a major investment acceleration from a lot of companies everywhere to invest in cybersecurity to make sure they don't have these massive breaches. Obviously, the market thinks the same thing. So you can see that just this ETF alone this week was up 9%, which absolutely crushed the overall market. And the interesting thing is cybersecurity stocks, they are very aggressive, like they are volatile, but they're also kind of recession proof, right? Or at least they are stay-at-home stocks. So if COVID continues to rise, I think this could be also a stay-at-home play because companies are going to invest in cybersecurity regardless. So with this one right here, I would definitely put this on the watch list. It is extended, right? It broke out of a major consolidation that goes back to December. So you have an 8-month consolidation and then a major pop breakout. I would not chase this right here. Even though it looks good, it looks juicy, it looks like it's going to go to the moon. All right, it's probably likely going to pull back into this 30, 31 area. Better place for entry. So I would definitely, this is one I would definitely put on your short list and look for a potential pullback. Another one that really popped this week is this Bets, BETZ. And this is the Round Hill online sports betting. It's the DraftKings of the world. A lot of the MGMs, a lot of these places that are moving to online sports betting. I think this is a going to be a massive industry, especially in the long term. I think what we've seen, what's happened with a lot of retail traders, like they like investing online in these meme stocks and gambling, and it's just the reality, right? But I think there is a long-term opportunity. So you had a lot of these stocks break out this week. I could say, okay, they broke out of a downtrend right here. So you could buy this breakout, but I think you're going to have a wide stop. 27.87. So it's approximately a 10% stop loss. Now this might take off and never look back. I personally would probably like a pullback a few points. But this one looks really good too. I think this is primed to break all-time highs. Right now it's 7%. For this ETF alone is 7% from an all-time high. I think it's primed to hit all-time highs. The DraftKings chart looks very similar, but really made a move this week. And there's been a lot of accumulation in those stocks since DraftKings reported earnings last week. So with this one, I would definitely put this on the short list. I'd probably go ahead and slap a buy rating on it. I don't know if I'd put a stop loss way down here. You might want to raise your stop loss a little bit so you're not really risking that much. Maybe a stop loss right under this 50, 200-day crossover, which is around 29. So you could maybe have, a 6% stop loss instead of way down here. If you wait for a pullback, obviously, you can put the stop loss down there. But I would say this one looks better as far as entry today than the cybersecurity ETF and stocks. Okay. Obviously, so these are two very aggressive industries, and this is really what I'm looking for. You're going to trade ETFs. You want to be a little bit more aggressive so you can make good money, just like UNG made some good money. But they can be volatile too. And at the end of the day, they are all stocks. We all have to understand that the stocks that are in these aggressive industries, they're going to move with the overall market. They're going to move up more than the market, but if the market pulls back, if we finally get that correction, they're also going to pull back more than the market. So we never know what's going to happen. We see setups on the chart that say, hey, this looks good. I'm going to place a trade. I'm going to put my stop loss. Whatever happens, happens. I'm just going to follow the rules. So I really, really like this. I'd really say, this week, as far as probably my top two are bets and the bug cybersecurity ETF. But this one's a little extended. This is barely in buy range. But kind of the way it's acting today, I'd probably go ahead and slap a buy rating on it with just a tighter stop, right? Because I don't think you want to risk always 10% on ETFs. Try to get them a little bit tighter just because they don't move as much stocks. So let's go to the 1 month ranking.
Hey, Steve.
Yeah.
Can we open up for questions real quick? I see Luther had a question.
Oh, sure. That sounds great.
Here, I'm on. Can you see that? That was.
Okay, so let me read this out. So Luther asks, I agree we need to hang tough, but what would you have to see on the SPX to close all positions? That's actually a great question. Let me go to the S&P 500 real quick. So, by the way, I'm not going to, I personally make trading decisions on the individual stocks, not necessarily the overall market. Yeah, I use the overall market as a guide, right? Are we in an uptrend or a downtrend? Sometimes you'll have stocks that go up when the market goes nowhere. But anytime a swing low is created, like, you have a pullback that creates a swing low. You have a pullback that creates a swing low. Another one. If we get a pullback and that swing low is broken, then I am hesitant to make new purchases. Okay, right? The yellow stop sign is kind of flashing on me. Hold on. It's a warning sign. But I'm going to let my individual stocks play out, because if I'm sitting on a stock that just does not seem to be bothered by the market pullback, I'm going to hold in. And I used to do that all the time. I used to say, oh man, the market is coming in. I'm going to sell everything. That was years ago. And it was a mistake every time, because even if you say you have 4 stocks, the market's pulling back and you have 4 stocks, you might have 1 or 2 that don't get stopped out. You might have 1 or 2 that just come back, find support, and then resume their uptrend. And when you're getting in and out, right, you're making some mistakes. So great question. I would say look for swing lows. But at the end of the day, if you have a trade plan for each individual stock, I would follow that trade plan, even if the overall market seems to be pulling back. Because you don't know which ones are going to hang in there and which ones are going to roll over. Sometimes they'll all hang in there. Sometimes they'll all roll over. Why try to guess? Great question. Do we have any other questions?
That's all I see right now.
Okay. So I'll continue to answer this. What I'm going to do is I'll go through kind of the top of the top of the 1 month, and then we'll maybe look at some tickers, open it up for more questions. I'm going to make sure that last time we well overshot the hour. I'm going to make sure that I continue try to keep it to an hour just to be consistent. So out of all the ETFs, now I'm ranking based on 1 month. That means the last 30 days. And this Argentina ETF is looking pretty strong. Now, I should almost eliminate this because it is so thin, right? It only trades 6,000 shares a day. So I don't think we can all go out here and trade this. But I think it's just good analysis. I mean, you can look at the chart, right? Had a nice cup with handle pattern, had a breakout, pulled back to support, kept going. I'd say this one is extended. All right, but it is up 14% for the week. The Bitcoin ETF or trust, right, is popping 1.5% this week. We're down slightly from last Friday, down a few points, but it did pull back and find support. Okay, so sometimes you always have to say, okay, what is reasonable? And when I talk about swing lows, I say, if we're getting in right here, or approximately right here. And then it just kind of pulls back, but support is not too far under here. Like, that's what I'm looking for. If it breaks below last week's reversal bar, this bar right here, then there's no reason to stay in it, right? This uptrend is over. All right. That looks pretty good. But look, you have some of the usual suspects. We already talked about bets. Okay, BETZ. You got the Philippines in here. I don't know how that looks like just a sideways ugly chart. So even though it's popped off the bottom, like, kind of good lessons. Even though something is up a lot, doesn't mean it's really in buy range or the chart is good, because this is still in a major sideways action. I'm not going to touch it. So this is something. Cocoa is still up, and I know we all think about cocoa is not very exciting, right? It's cocoa, and it's been an ugly chart as far as the eyes can see. But here's what's interesting. Here's what's kind of standing out. I'm going to go back to the daily chart on this one and maybe blow it up a little bit. It had a major, so maybe want to put on your watch list. It broke out of a downtrend, which is not that big of a deal because it is in a major sideways action, right? What is intriguing me is look at all this buying down here. You have lots of accumulation going on down here. Now on the pullback, you had some distribution, but yesterday you had, what this means is that means the largest volume since it's consolidated, right? You had a big buyer step in a couple days ago. And more buyers step in. So with this one, it's still in a sideways action. So I don't like the long-term chart, but it's getting intriguing based on all this accumulation that's coming in. If commodities start to pop and this breaks above this level, I would say that could be an entry if it breaks out with just a tight stop under this swing low. And I probably wouldn't slap the buy rating if it breaks above this level if it weren't for all this accumulation down here. Someone or several people are accumulating this, and it broke out of a downtrend, and you have some accumulation. So I think it's time to really pay attention. Sometimes it seems like every year my biggest winner is not always the most exciting name, but you never know. Another one I know I talked about sugar last week, but that is still extended. It never I said put this on your watch list, and it really just kind of went sideways. It never did pull back into buy range. So we'll just kind of pass on this for a second. I do want to talk about wheat. Wheat is up. Full disclosure, I do own this wheat ETF, but it's kind of interesting because you can see that it broke out. I bought it on this breakout date. It broke out of this 742 pivot, barely pulled back to support. In my opinion, this could be a very, very low risk, high reward entry, because you could literally say, okay, if it pulled back to this support level, which I think most of us would agree, it's kind of interesting what turns into what is resistance, breakout turns into support. Right here is 7. You could literally enter right here with a stop loss at 6.99 or maybe a little bit lower. You could risk 2%, right, to see if it finds support and breaks out of here. So I do like this setup right here. I think that just based on everything I'm looking at, it's a very reasonable setup. Breakout, pull back to support. I think this looks pretty good right here. Does that mean it's going to pop? No, but you can trade it with very, very little downside, right? Because if it pulls back, if it shakes you out, I just get out of the way. You risk 2%, no harm, no foul. But the chart looks bullish. It is a reasonable setup. It is a reasonable trade. So kind of looking at everything the way I see it, on all the top lists, I would say that wheat is a pretty good looking setup. Maybe not very exciting, but it did make a major move from 576 to 742. So this commodity can move if it under the right circumstances. And I like bets, right? Bets looks good with a tight stop under the 200-day, under the 50-day. You have kind of double support right there. You could have a tight stop. It might pull back and test it. If it does, you can get in even closer. If it breaks below this, just let it go, right? Because we don't know when something pulls back or stops us out. Sure, a lot of them come right back. Some of them don't. Some of them can be catastrophic. And I don't want to sit through catastrophic. I'd rather take a small loss and move on, right? If you're going to lose, I think it's good to lose quickly. That way you can move on. If you're going to win, right, ride it out. Cut your losers short. Let your winners run. Any questions about any of these charts? There's not as much, in my opinion, as much opportunity this week as there was last week, but I think we have a couple ETFs that are setting up. I think if you want it to be more aggressive, go to this bets. Just Google BETZ fact sheet and look at the top 10 stocks.
Do you see that question,
Steve? Really good ideas. Okay. Kevin asks, what are the rules for an ETF or an individual stock when it hits a 52-week high? Do you change the stop loss? So I use the same. That's a great question, Kevin. Thank you. I use the same rules for all trades, whether it's a stock or an ETF. Once it hits 8%, it's our 508 strategy, right? It's an automated profit booking strategy. Once it hits 8%, I'm selling half, and then I'm going to let the rest run until it breaks the 50-day moving average. Once a week, I will raise if the 50-day moving average is going up, I'm going to raise my stop once a week, 1% under that line. So we'll kind of use a simple example. If I enter Apple at $100, and let's say I have a stop loss at Apple at 90, and I have a price target at 108, 8%. Once I hit that 8%, I'm going to sell half. And at the same time, I'm going to raise my stop loss on my remaining shares up to from 90 to 100. That way, if it rolls over, it's going to trigger me out for a 4% gain because I sold half at 8. I sell half at 0. I'm netting 4%. You do that once a week. I'm sure you can do the math. You walk away with some nice income trades. But some of them continue to go higher. So I'm just going to say, okay, let's say this was Apple, or, it is any chart, right? If it continues to, let's say it hit my 8% target right here, I raise my stop to break even right here, and then it continues to run, I'm just going to slowly raise my stop loss, right? 1% behind the 50-day moving average. So if the 50-day moving average is, just say $50, I'm going to raise my stop loss to $49.50. I'm just going to do it once a week. And you can just get in the habit of doing it once a week, maybe every Monday, check the 50-day moving average and raise it. Where the stock or the ETF is at a 52-week high they're not a part of my rules. Because when I'm in a trend, I want to give that trend room to breathe. So I'm going to give it a little bit of room to pull back. Okay, so if I entered right here, let's say this broke out right here. I have a stop loss right here. I entered here, got out at 8% right here. I'm letting the rest run until it breaks the 50-day moving average. So I don't get stopped out till way up here. Okay, you're just giving it room to run. You never know how far something is going to go. Most people, including yours truly, are bad at guessing. It's a guessing game. You have no idea. And if you try to guess if you say to yourself, oh, that can't go any higher, I'm just going to sell it. Or the market is pulling back, I'm going to sell everything. Over time, you are going to cost yourself some major, major wins. And 2 to 3 monster wins per year is the difference between you making a little bit and just knocking the socks off the market. You cannot cut those winners too short. I hope that's helpful. Any other questions? I think I'm doing good on timing, Ben.
I think you are too.
Are there any ETFs anybody wants me to look at. Or stocks, tickers. We can have a little segment on that. I think someone said DFW. It's not pulling up.
I assume that was Dallas Fort Worth when we were asking where everybody was from, and it just came in a little later.
Okay. Makes a lot more sense.
Here's some tickers coming in. BITW.
MCO Realty. Okay. We'll get to as many of these as we can. So let's just kind of look at Kim, for example. So I'm looking at this. I don't trade a ton of REITs, but this is a nice steady uptrend, right? We'll go to the weekly chart. With REITs, you almost have to, a REIT trend, what I call a REIT trend is completely different than the rest of the market. They're so much smoother, right? Because they're just dividend paying stocks. This to me looks pretty good right here. Now it's a slow mover, right? But it made a nice move from 10 to 22. It's been consolidating right here. I don't know if you own it or not, but you can see a lot of distribution coming in right here. PPO. I think this looks like a pretty good chart. If it breaks above 22.45, obviously that would be better. The one thing the one knock I would say on this is this line right here, squiggly line. This is a relative strength line to the S&P 500. What that means is when it's going sideways to slightly down, if it's going slightly down, it's underperforming the market. This stock has been underperforming the market since February for the most part, barely. So it could be a good conservative play, but for me, I'm really looking for something that is beating the market, right? But if you're looking for a dividend playing stock, I mean, it looks pretty good, consolidating. I'd like a breakout. ERJ, let me just kind of go down the list. ERJ. I'm not familiar with this one. A Brazilian manufacturer of aircraft. Look at the daily chart. This looks pretty strong right here. This is probably my cup of tea, right? You have a major, you had a pop on earnings, it pulled back, and then it came right back. To me, that's incredibly bullish because failure to fail equals strength. So it tried to fail, it tried to roll over, and it just came right back and retook that trend line. So if you own this, hats off. It looks pretty good. If you don't own this, I'd probably let that gap fill, or I'd probably let it pull back a little bit because right now you would be 100% chasing it. But as far as the accumulation goes, the chart goes, everything looks pretty good right here. You can see a rising relative strength line. This looks like a pretty strong stock. All right, they're coming in fast. So let me just kind of go down the list. HubSpot. Okay. So it's hard to argue when you look at this chart, right? I'm looking at the weekly chart at the moment. Let me kind of blow this up a little bit. It's really hard to argue. I don't know if you own this or if you're looking to buy this, but let's go on the daily chart right here. To me, when I'm looking for an entry, I'm saying, okay, I'm really looking for a pullback to a support zone, to a support level. And I really like to buy within 5% of that level. Right, that way, if it breaks support, you can just get out, low risk. Right here, this is a little extended. So if you own it, I would just continue to own it because it's just grinding its way higher. If you don't own it, again, this is probably 13.5% above support. So, and plus it just gapped up on earnings. That's super positive. It's a very strong stock. I wouldn't enter here. I would let it pull back. But if you own it, it looks pretty good. Okay, I'm getting lots of tickers. iShares medical device. So I was looking at this chart earlier as I was going through all the tickers, all the ETFs. This chart looks really good. I'd like to blow it back up and go on the weekly chart. You can see the medical device is a really strong industry. For me, since this is a good looking chart, Okay, but it does kind of look like the market, right? It breaks out, it pulls back, it pulls back. You kind of have these support, even though it is stronger than the market. For me, I would probably go and look at this ETF and look at the fact sheet and say, okay, what stocks are really lifting this if you want to make even more money, and let's play a couple of those stocks. Because I guarantee you, if you look at the top 10 on this ETF, there's some really, really strong stocks that you could probably make some more money on. But the chart looks good. Probably a little extended for me because it broke out right here. For me, when I look at these consolidations right here and you get kind of that W, that double bottom, I'm looking to break it as it crosses that line right there. That would be my ideal entry as it crosses that line, because then it's trying to break out, it's rounding. That would kind of be my ideal area. I look for kind of at the bottom of consolidations. I pick, some resistance areas, and then when it breaks through, I love entering right there because it usually works. It means it's kind of getting through all that junk on the bottom. Okay. All right. Bots. Okay, Global X AI. So this looks pretty good too, and this is a growth stock. It's kind of interesting how you have all this distribution down here, and yet it's still hitting all-time highs. To me, this is a really good looking ETF because the chart I just showed you, when you kind of find that place at the bottom of the consolidation that it just keeps hitting and it just keeps finding resistance, then all of a sudden it breaks through that resistance line, and now it's kind of holding above that line. I think this looks really good right here. But it's interesting because you've had a couple weeks ago, for about a month, growth stocks were not looking good, even though the market was notching all-time highs. Now, it seemed like the market, or at least got wobbly yesterday, growth stocks are looking good. So I'd say for the most part, growth stocks have definitely underperformed value stocks, but sometimes it's really, really interesting where they can start to outperform. Sometimes they can outperform when the market is starting to look ugly or when the market is going down. Growth stocks usually break out before the overall market does. Or growth stocks usually start to pop before you get a buy signal on the market. This ETF looks good to me. Did I already go over Cure? Okay, so this is a healthcare 3X ETF. This is a leverage ETF. Yeah, I mean, to me, if you own it, that's great. To me, it's long gone. For something like this that has moved up so high, I'm looking for I'm looking for a consolidation, like a breather, because even the strongest stocks or the strongest ETFs, they need a breather. So that's usually what I'm looking for. I'd be looking for something like this that made such a monster move. I'd be looking for a longer consolidation like this, and then I'd kind of draw my line on resistance and then buy the rebreak. Looks good if you own it, though. So we got USMV. Okay, so this is a minimum volatility index. So a conservative ETF is looking pretty good. I mean, but it does look like the S&P 500, right? It looks like the overall market. So, and there's nothing wrong with that. Okay, I mean, something that it goes up, consolidates, goes up, consolidates, kind of like the overall market. Something to consider. So these are great kind of core portfolio style of ETFs where, you have your core, right? And then you have a bunch of satellite positions that can get you that extra money, like bets, like UNG did, or GBTC, all those more aggressive plays. So this is great as a core portfolio idea because when the market goes down, it will likely go down not as much, right? When you have a minimum volatility ETF. To the upside, it's going to lag a little bit because you can see right here, since really the market's been an uptrend, this squiggly line, right, has been going down, meaning this has been underperforming the overall market for a year. So there's always give and take. You go minimum volatility, you're going to have less downside, but you're also going to have less upside as well. Okay. Any more? How are we doing?
On time, we're doing good.
Cool.
And you know what I really like about today, Steve, is that, last week we did this and it was, our pilot run. Today, everyone's getting a lot more involved. A lot more tickers were brought. I like it. And some good ones, too.
Absolutely. There's some great ideas on here. Some great uptrending charts. That is absolutely great. I hope you own it, but I hope this also, when you're looking at something and you're getting ideas, it's important when you have a chart that looks like it's just going straight up. It's important to be disciplined. It's important to let something go if it is not in buy range, because at the end of the day, we're trying to put all these little rules in place that just give us a slight edge, right? Buying close to support is going to give us a slight edge. Using stop losses is going to give us a slight edge. Our automated profit booking strategy is going to give us a slight edge. So over a reasonable number of trades, if you compare it to the casino, you are the house over a reasonable number of trades. So that's what we're trying to do. Give ourselves little edges, right? We'll play enough hands. We are going to be the house. We are going to end up on top, and we are going to be happy, but we have to stay disciplined. And one of the most disciplined thing is to not let FOMO kick in and try to chase something that is just up and you feel like you have to have it.
Can we look at STM real quick for Monica, and then we'll talk about what's to come?
STM. So Monica is this is awesome because I was actually looking at this chart this morning. I don't know why I did that. I was looking at this chart this morning, and I'm going to add one chart to this that I wanted to talk about, and that's semiconductors. This is one of the strongest semiconductor stocks. If you look at, we're going to look at the semiconductors ETF in 1 second, then we'll talk about what's to come. This is a really good looking stock, and a lot of the semiconductors, that's one industry that might not be in the top, but I think it's something you want to put on your watch list. Because you can look, it reported right here, it gapped up, and it really hasn't even pulled back to fill the gap. So this is a very, very strong semiconductor stock. It looks really good. I wouldn't chase it right here. I'd probably try to get it closer in the 40 to 41 area if you don't already own it. But on the weekly chart, this is looking pretty good. And over here, you can go to look at some of these stocks. I'll look at NVIDIA. Right, which full disclosure, I do own. Whoops, NVIDIA. I do own, but look at this. A lot of semiconductors. Look at this. Look at this breakout right here. Right, you got a nice cup with handle pattern, earnings breakout in the handle. Boom, boom, boom. It's going up. Don't chase this. I like it closer back to the original pivot. It will come back. Don't worry. It's extended right now. But my point is that a lot of these semiconductors are looking really good. So I do want to show one ETF that I did want to add to the list, and that's SOX, SOXX. Had a really strong week, up 5%. This looks pretty dang good right here. So I'd probably see if it does pull back a few points, maybe just a few points, but I would definitely pay attention to the semiconductor industry, because there is a global chip shortage. You have a lot of semiconductors that have reported very, very positive earnings, like NVIDIA and the one we just talked about. So I definitely look at some semiconductors because they are looking to outperform. Okay. I feel pretty good about that.
Me too. You want to look at a couple more real quick?
I can look at a couple more.
Okay. Kevin's got URNM, SILG, and GDXJ.
Okay. So this is, I've never seen this uranium one. I'm familiar with, okay. Let me look at this. North Shore. This must be a new one. Maybe I'll just add this to the ETF list. Up a lot this week. So I'm usually not going to buy something that goes straight up 12%, but this is definitely something worth watching, because remember earlier in the show, I talked about fail to fail equals strength. So when you have something that briefly breaks like a major support, like the 200-day moving average, and comes right back, and it comes right back in a very strong manner, that's pretty bullish right there. So it's trying to break the 50-day moving average. I wouldn't be surprised on this if it just comes right down and tries to kind of build that inverse head and shoulders, right? So for me, I'm looking, it's very strong right now. I like it. I'm looking for that kind of pullback and that re-break. That's where I'd be interested in, but I definitely a good one to add to your watch list. Lots of volume coming in today. What was the other ones, Ben?
Oh, SILJ.
Silver miners.
Mm-hmm.
So silver miners has been slightly discourteous to me this year.
It was.
I've talked about silver miners so much, and it's interesting because I keep talking about commodities and on and off for the last year. And what's interesting is it actually wasn't miners in the commodity side. It was the agriculture ETFs and, wheat and, cocoa or just whatever. It's a lot of the agriculture commodities. I would have told you this right here. When I was looking at this chart, I was like, this is incredibly bullish, right? But it just kept trying to break out and failing. And it went sideways and went nowhere. And now it is really completely under this consolidation and looking incredibly ugly. So it's looking good today, but it has had so many pops and so many failures. And then when you have the dollar that is looking pretty strong, I just think there's better options out there. It doesn't mean this can't work. It can absolutely work and it can absolutely go higher. But I'm looking for strength here. And there has been so many whipsaws and silver miners. I've kind of thrown my hands up at it and be like, it's not as strong as I thought it would be. Sometimes the minute I say that, it just takes off. But
sure. Well, GDXJ.
Yep, the same thing. GDXJ is the gold miners junior. All right. I'm going to blow it up to look at the weekly chart. It's in a downtrend, and it's hard to argue. And this right here, during this whole time, I would say, look, I get it that it's under major moving average, but that looks like a bull flag all day. So just waiting for a breakout. And it broke out, and then it just absolutely rolled over. So you can have like false breakdowns could be an above average move the other way, right? I learned that from Martin Prink. False breakouts could be an above average move the other way too. So to me, I'm looking at this as you had a breakout, it failed, it rolled over, it undercut the chart. I can't find anything positive about it unless you're trying to short it.
Hey, Luther asked real quick, how can you watch this later? I'll be sending out the replay link for these for a while just to get people used to seeing that. But yes, you can find it on the YouTube channel, but I'll send you an email to everybody's inbox who's on this list. Real quick, Steve, one more
CrowdStrike. Made lots of money off this last year.
Mm-hmm.
So it's funny because CrowdStrike was our second buy after the March sell-off of 2020. Made some really good money off it. But, okay, so right now, my first argument was, so this is kind of the hack. Remember all the cybersecurity stocks I was talking about, right? This is in that cybersecurity industry right here. They're all just absolutely gapped up. So I'm not buying right now. I'm waiting for a pullback. If you own it, hold it. Keep in mind that it's reporting in 4 days. Estimated reported August 31st, which I think is a Monday or Tuesday of next week. So I don't know what your rules are for holding through earnings. If I've already hit an 8% target and sold half, I'm sitting through earnings. But this is a volatile one.
Mm-hmm.
So looks good right now. I personally can't recommend something right before it reports earnings. But it is a little bit extended. So if you own it, great. Sit through it. Give it a little bit of breathing room. Because I think based on the news that came out of Washington And based on what I see on the charts, cybersecurity stocks looking like they want to outperform and make a major move. At the end of the day, the market has to make a move too. So they're likely not to completely buck the trend because they are aggressive.
All right, I'm going to throw one more out there. CMG from Mary.
Last one.
Last one we'll go in. Thank you.
Last one. So Chipotle Mexican Grill. What a strong chart. I really like this. And it's kind of interesting how it's $2,000 a share. I'll never forget when this Chipotle Mexican Grill was just way under 100 and it was looking not so strong. And this is just one of the major winners of the last decade, Chipotle Mexican Grill. And they have just continued to figure things out. But it is extended, right? It gapped up. Ooh, how much on earnings? Gapped up 11.5% on earnings a month ago. These are actually the kind of plays I look for to buy on pullbacks. When I'm in earnings seasons, I say, okay, what popped on earnings already? Let me go find these stocks and see if I can get them on a pullback. So what's interesting about this stock is when I'm looking to buy a stock on a pullback, I'm looking for that low volume pullback. Means no one's selling, but probably retail traders like you and I. Okay. All the smart money is buying, right? People are booking profits. It's going to pull back, and I usually use the 50-day moving average as a benchmark. I want to buy that first 50-day moving average test. But I really like it when stocks on down days, they have no distribution. That's what I'm looking for. I think if I remember correctly, I think NVIDIA was kind of a perfect example. It built a nice cup with handle. And then during this pullback, there's no volume, none. And then earnings, boom, boom, boom.
Got it. Thank you, Steve, as always, for your analysis. Good show, good session. Thanks, John. Thanks, everybody, for all the kind words and just interacting. Like I said, it's getting to the point. The more engagement you guys can throw at us, the more tickers you could throw at us, the more we can provide on our end. And we're still we're talking about this, trying to figure out the best ways to engage, just slowly working it out. So let me tell you real quick what's coming. September, we are planning on doubling these live sessions at least, and probably a few more impromptu, but pushing it to Wednesday and Friday. And we're going to be adding more sessions, different types of segments. Greg's coming in, going to be talking more about options. Steve's got ETFs on Friday, and then we're going to throw in some more stuff. But we're trying to slowly build this up to where there's lots of content and lots of engagement. Speaking of which, I mentioned in the email that we're going to be running a competition really soon. Let me kind of clear that up. I didn't get all the details that I wanted. We ran into some software hangups, but it wasn't going to start till next week anyways. This is something that we're doing to try to get more eyes and more engagement with you guys. So it's not something that, right now that we're trying to get something that you can make picks, we can watch, we could talk about, you could see other successful picks and what everybody's doing, but it's completely an amateur competition that you guys should just be able to enjoy. And we're going to have prizes, cash prizes, workshop prizes, different things to engage more. But I had some questions and people kind of thought it might be something that it's not. It is absolutely something that you should get involved in. When we launch this next week and I say, hey, make your pick, here's the rules, here's how we're going to do it. I'm looking for feedback and I am looking for you to help us to build this, but it is an engagement tool because we can only see so much, right? We all follow these trades and we talk about analysis and stuff, but at the end of the day, you're out there making your own trades and you're doing your own thing. And this is a way that we can kind of talk about steps that you took and things that you did and bring trades into the fold where we're all looking at them. So it's going to be fun. We're doing the first one. You guys are like our pilot crew. So anyone that helps us to engage, we want the feedback. We'll run surveys, but It's going to be something that we can do together and that you guys can help us build out. But don't overthink like, you're going to be put on blast or anything. This is, you make a pick and we're going to have fun with it. And we'll do different types of competitions. But the more you're doing this and the more we can talk about what you're doing, it's just going to make you a better trade in the long run. And hopefully we're all making more money from it. So that was a little bit. But we'll talk about the prizes, the schedule, and everything. I will send out an email to you guys with everything as far as schedule and prizes and rules for the competition, start date. So don't worry about that. But we're really close to getting that off the ground.
And no cost entry. I mean, this is completely free and just meant to be
yeah.
Fun, right?
Sorry, yeah, no cost to entry.
Cost entry. Free and fun, prizes, and that's just our goal, right? To all have a little bit of fun, all right? And
make some money, be better traders.
Yeah, be better traders. That's what we're all trying to do on a daily basis. All right, just be the best we can be, implement some rules.
If you have any ideas or anything, I mean, as long as it's constructive, email me, support@thetradersplan. Like, we're trying to create this live segment for you guys, so don't hesitate. Like, the ones that are showing up and that are interacting, this is making us, better content providers for you, better educators for you, which is all going to make us better traders. So it's new to us too, as far as this live streaming goes, but I'm enjoying it so far.
I like it.
I think it's really cool. So yeah, thanks for all your support, your attendance. You guys are awesome. Hey, let's just recap real quick the ETF list for this week, watch list. So we've got wheat and bets. Those are who you really like going into next week or right now.
Yeah, I think so. All right. And at the end of the day, full disclosure, do your own homework, right? Make your own trading decisions. Got to throw out that disclosure, right? Never trade anything without a stop loss. Never, invest in anything, the lawyer type stuff. But yeah, I have to when I just look at the chart, right? And this was up before the show. And I mean, you could literally just put a stop loss right under here. And if it doesn't find support, just get out. Right. Same thing with bets. And at the end of the day, these are, where did I put bets? The market does have to hold up for these to hold up. But this is looking pretty strong right here, this bets. And, with just a tight stop, like never risk too much. And if you want to paper trade stuff, that's totally fine. But if I were to put my money in two places, it would be this today. They might look different tomorrow. But anytime I look at something, I just take it day by day and then go from there.
All right, good deal. Hey, did anybody jump on UNG last week? I kind of asked that in the beginning of the session. Anybody besides us jump on UNG? Like, we are trying to get, money is the goal here. So I want to see if anybody's actually taking these trades. And it's cool if you didn't. I'm just trying to see if anybody popped on that last week, if that was their winner. Just me.
Just you. I did get a couple emails that a couple people took it.
Yeah, so did I. I just see if because we put this video out afterwards to a lot more people, but I'm curious if anybody on there live took it.
Yeah.
So we got and on the watch list, who do you like on the watch list? I put URNM on the watch list. Thanks.
Yes, I think what's also on the watch list is Bug, B-U-G.
Yep.
And what's also on the watch list is NIBB.
Mm-hmm.
Or it's NIB, the cocoa.
Yep.
As weird as that is. I think Bug and the NIB are probably on the watch list. I would pay attention, and I would say SOX, SOXS, the semiconductors.
Mm-hmm.
A lot of those are extended, though. But, man, like right now, I'm pretty happy with NVIDIA.
Right. Okay, great. I will get this email out and send the replay out. And we've got our list to look forward to. And keep an eye out for the email that we'll be sending about September's live stream schedule. The competition, the little trade competition that's starting pretty soon. That's going to be fun. And hit us up with any feedback or anything that you guys, would like to see that maybe we could incorporate into the show. Mm-hmm. This is a work in progress, but it's going to be your feedback that helps us to, kind of put together this content for you. So,
yeah, did get one question. Someone asked about the volume. Yeah, the volume on NIBB is not good, right? Kind of forgot about that. That's probably a good point, right? But it is on the watch list. It's not on the buy. On wheat actually, if you look at wheat, it actually trades on average 344,000 shares a day. That's an average. So I'm not worried about the volume on that, and I'm not worried about the volume on bets. It trades 171,000 shares a day. Those are plenty. NIB, you got a point.
Huh. Good question, Rhonda. Okay. That's all I've got.
Everybody have a great weekend. Have a blessed weekend. Be safe out there. And like I said, if you got any questions, email support@thetradersplane.com. And we'll see you next week.
Thanks, guys.